Let us look at document 4 and see what it has for us. So what we'll do, we'll read all together and analyze information that has been provided to us. After we're done reading, we're then going to look at the 4 CASA discipline, which is the taxation, which looks at your direct and indirect tax. We look at management accounting and financial management part, and then we look at accounting, then the last part, auditing. So what will be the reason for us to look at this 4 discipline? It is to ensure or make sure that we've covered all the disciplines that need to be covered before we go and write the main exam, the main SAICA board exam. So we are assuming as we are looking at this that we are in 2020. Yes, I know we are not in 2020, but then we are making assumption that we're in 2020 and we're going to write the following week, which will be next week. So what would have been expected of the candidate is also what we're going to cover in this video. Let us start reading. Obviously, you're going to get a greeting from Charles, who is the CFO or your direct line manager. Avocado have become standard products for international retailers. The demand for avocado is strong and keeps rising, but with more supplies from new countries, oversupply will be unavoidable. If BK is to remain relevant, we must remain cognizant of changes in the industry. International glucamole, a byproduct of avocado production, is growing in popularity. The integration of the glucamole production into BK's existing operation would enable BK to expand its earning base, diversify its existing product line, and provide us with an opportunity to efficiently utilize substandard avocados and thereby minimizing waste. At the shareholders meeting held last year, a number of key stakeholders asked whether it would be possible to integrate downstream industry into BK existing operation. Following this, the board constituted a steering committee to determine if it would be beneficial for BK to enter into a production of glucamole. The steering committee has identified the following 2 ways in which BK would enter into a glucamole production manufacturing environment. The first one will be to entering into the offtake agreement with an external glucamole producer, whereby BK would supply all the waste avocado to this third party for further processing at an agreed upon price. Number 2, adopting an organic growth strategy whereby BK would expand its existing operation to incorporate a glucamole product processing plant. We may be required to assist the steering committee, but I will wait for the committee to contact me next week should it have any specific requirements. I will provide you with the further information next Thursday. So what is happening here? So the CFO is informing you in terms of what is happening, what is the plan the company has in place going forward. You recall from the background that the CFO had informed you that you're also going to be assisting with strategy of the organization. So as we're looking at the overall of what we see here, this looks like more of the strategy that the company wants to embark on, and you need to assist the committee that is formed to look at this new product line that they want to embark on. So why is the company in to start producing glucamole? The reason for that, it is based on the fact that they see the competition is rising. As the competition is rising, they need to remain relevant. And by remaining relevant is that they expand and increase their earning base. So in order to increase their earning base, they are saying they have decided that they will use the waste avocado or the byproducts of avocado. In this case, it's the pack out, so which are those avocado that cannot be sold to local and external market. And then they will use that to produce avocado. So in the board meeting last year, the stakeholders were concerned in terms of there's no way that the company could integrate downstream industries into their existing operation. So meaning to say there's no way that they can find ways to expand. For that reason, after that meeting, a steering committee was formed. So the steering committee then would have to assess how are they going to go with the production of glucamol, or how are they going to introduce the production of glucamol into the business. The steering committee then said they have looked at it and then they've realized that there can be two ways in which the BK could enter into a glucamol production business. The first one is that they go ahead and sell to external glucamol producer at an agreed upon price. So it's more like selling the product. So that means they'll just need to now package the pack out to sell to the third party. And then the second part is that they expand the existing operation through organic growth strategy by purchasing the processing plant. That means now for number two, everything will be done in-house. They're not going to approach the third party, but they will produce glucamol in-house after they've purchased, obviously, the processing plant. And then what the CFO is saying is that the steering committee might require us to assist with this projects they are working on. And then the CEO will touch base to you next Thursday. So next Thursday is the day that you will be writing an exam. So how do we know this is a trigger? This is a confirmation of trigger because you will be required to assist. So it confirms this is a trigger and you need to do work on it. Now, before we discuss what you're going to be doing, what work you're going to be doing, I want us to look at the four disciplines and see where is this covered or where we would need to look at. If we're looking at tax, the tax is not directly triggered. However, if any of the discipline that is triggered will have an implication of tax, you will need to only know that section that has tax implication. If we're looking at the entire scenario, there is no direct trigger for tax, but the tax could be indirectly triggered in that way that the full trigger, it has an element of tax on it. So it is not directly triggered, but might be indirectly triggered. Then when you're looking at accounting, there seems to be no direct accounting standard that you need to analyze here. Pretty much no direct accounting standard that you need to go and assess and study. Then, auditing. Auditing is neither directly or indirectly triggered. And the reason we're saying auditing is neither directly or directly triggered is because of the fact that the CFO here is talking about internal matters. And those internal matters does not have to do with anything pertaining to the external audit company. The CFO here is not saying, look at the things that the external auditors might be looking at. Nothing said about the external audit here, but it's more to do mainly with the strategic move of the company. It is for that reason we're saying auditing is neither directly or indirectly triggered. Now let us look at management accounting and financial management. So that's what is triggered in this question. Meaning to say you cannot go to the exam without understanding the management accounting. And now when it's come to management accounting, what you need to know for this paper, you need to cover two things. You need to cover the qualitative aspect of this trigger or this document. What will be your qualitative aspect? It will be you going and look at both the pros and cons of option 1 as well as pros and cons of option 2. What will be the benefit of BK going for option 1 or option 2? And what will be the pitfalls of going for 1 or 2? So that it will be you covering both the positive part and negative part of both the options presented to you. How are you able to do that? It's to use the background information that is presented to you. It will guide you in terms of what are qualitatives and what are quantitative methods to look at. So we don't have a lot of information presented to us now because the rest of the information will be presented to you when you go and write the paper. So now, as you look through here, you're like, okay, cool. Based on what I see, now I understand that I will then potentially need to understand the qualitative surrounding this strategic decision of the company. And moreover, you need to cover the quantitative part of it. What will be your quantitative part of it? You need to understand what needs to be an input on the NPV calculation. You need to understand things that you can put on NPV and those that you cannot. So when you think of NPV, calculation or internal rate of return, your main focus will be the relevant cost, and that will drive either project one or project two. Irrelevant cost or costs that could be avoided or costs that are not incremental, you should not worry about. So in the information that will be presented to you, it most likely you will be given NPV or internal rate of return calculation to analyze. I can tell you upfront, whatever they're going to provide you, it will be incorrect. If you don't know how to calculate NPV or internal rate of return and what are the things to include and not to include, you will not be able to see the errors because it will look like it's correct, but it will not be correct. The reason the examiner will make things look like they're correct is because they want you to understand. As a CA, you have to critically analyze things and you have to understand what should be in the NPV calculation and what should not be in the NPV calculation. Similar with internal rate of return. So what you need to know that you understand this is a capital budgeting question. You need to understand that the time value of money implication need to be understood clearly on the basis of the fact this project will not be for 1 year. So you need to understand the time value of money and how you go about taking into account the time value of money in your calculation. So this project, you are evaluating two different alternatives. So you need to understand how do you go about evaluating two different alternatives, looking at both quantitative part, which will be your NPV or internal rate of return, and the qualitative aspect, where you're using the information that is in the background information of this paper, as well as what will be presented to you when you write the paper. So when you're looking at this paper, it is more deep detail in terms of you understanding capital budgeting. It is a capital budgeting question, and it needs you to understand the evaluating of different alternatives for the company. So what you needed to do then to summarize after you see this document is that you go understand what should be form part and what should not form part of NPV calculation or internal rate of return, and how do you go about identifying errors on the NPV calculation. Number two, you need to assess qualitative matters. Now, the last part, we are looking at what is not directly triggered. In the NPV, you know that you need to have tax. So there need to be tax line that you need to deduct. So you need to understand how do you go about calculating the tax that is inputted in the NPV. The reason I'm saying that is because in the exam, you will be given tax calculated. But for example, the tax calculated will be having depreciation on it. You're not going to be able to identify that depreciation should have not been there. However, what should have been there, it's wear and tear. Do you see now how the tax has been indirectly triggered? It's not directly triggered, it is indirectly triggered. This was management accounting and financial management question, but the tax was indirectly triggered in a way that if you're presented a tax line, in the calculation of NPV, you are able to see the tax is calculated correct or not. If you have any question regarding this document, please drop your question on the comment, then I will assist you on any experts that you will need me to look at. That takes us to the end of document number 4. Thank you so much for listening. Please follow me on YouTube. It's Economics 199. And also, please follow me on TikTok if you are from YouTube at Economics 199 as well. Enjoy the rest of your day.